Nathan, you'd be shocked if the Fed moved one direction or the other on rates, right?
Absolutely shocked. As you said, it's all about communication.
Okay, so and the communication. We talked with Steve Leisman just a few minutes ago. He said the thing that he's going to be pushing for, as somebody who's asking questions in the room, is trying to get some more clarity around what the Fed will do with the balance sheet.
Right.
What do you think?
So the markets are looking for the Fed to sound patient on rate hikes. They're going to get it. The markets are also looking for the Fed to back away from its balance sheet normalization plans, and I'm afraid they're not going to get that.
Right.
Now, that said, I think that Jay Powell is going to sound more flexible about it and more data dependent, emphasizing that he's watching the markets. He's going to be more nuanced than he was in his previous press conference.
Look, the market has gotten what it wanted so far, which is just that. The Fed to sound like it's backing off, to be pausing, to be saying that it's data dependent. But when the market gets what it wants, it pushes for something more, just like any child would do. What they want right now is to hear that there's a real number that they're going to be looking at for the balance sheet, or for him to maybe talk a little bit more about what data he's going to be watching. You think they'll get either of those issues?
So in terms of a number for the terminal balance sheet, I don't think the Fed knows.
Right.
And I think that for political reasons, the Fed wants that balance sheet to be as low as it possibly can be. So it doesn't want to pre-commit to anything. But then on the other hand, it's got to watch the markets. It's got to watch financing rates and funding. And it's got to listen to market sentiment. So it's going to push the balance sheet as low as possible, but no lower. They don't know what that number is. Most analysts now think it's around $3.5 trillion. That sounds like a good guess to me, but could be higher. Yes, it could be a little lower. Time will tell. And I think if the Fed tries to lock themselves in too early, maybe the markets would like it in the short run, but I think it could create some tensions down the road.
What does the economy look like to you? Because there are so many different numbers we're watching, numbers we're missing that we're not getting because the government was shut down. Earnings calls, some of the guidance has been a little softer, especially for those companies that are multinationals. And then we just got an ADP number that was stronger than expected. So what data do you look at to tell you what the real economy looks like?
I continue to see a solid U.S. economy, maybe not a spectacular U.S. economy. As you said, the labor market looks good. The consumer is still good. We're still going to have fiscal stimulus supporting growth this year. On the other hand, we've got to watch the housing market. And then, of course, the global backdrop is concerning, with the key question there being, when are the Chinese authorities going to put in enough stimulus to support growth and stabilize the situation? It seems like maybe now they're in the process of doing it, but it's still likely to be a few months before we really feel the full effects of that.
What about inflation?
Yeah, I think that's the question. What about it? Inflation has been surprisingly contained given the behavior of the labor market. If you had told economists a few years ago that you'd have an unemployment rate in the 3.5% to 4% range, and that inflation, core PCE, would be struggling to reach 2%, people would have been deeply skeptical. We just haven't seen the inflationary response that would have been expected. Does that mean we'll never see it? No. But the weight of the evidence is on a very restrained inflation expectations passing through into a very stable inflation performance.
You think Jay Powell's goal is to get out of this today without saying much of anything?
I think that he wants to get through it without roiling the markets on the one hand. But on the other hand, he's got to give a reasonable impression and discussion of what the Fed expects to do. And I think the Fed is constrained, as you said, by the low unemployment rate and by the fact that the U.S. economy still looks solid. Sure. So it's balancing what the market wants to hear against some of the stronger
Nathan, did you predict
5
years ago that the unemployment rate, the inflation rate, and the Fed funds rate, if you add them up, it'd be less than 10? Did you ever predict that?
I probably would have been off by
a factor of 2, probably.
Probably close to that.
I know, it's unbelievable.
Yeah.
I don't know.